start with this? Well, the first place I want you to start with is not this place. Who has heard of the principle of eating the frog in the morning? It is that you start with the things that you don't want to do in the morning. Start with the difficult thing, because if you eat a frog in the morning, that's probably the worst thing you're going to do all day. So start with, hey, I've got to reprimand that staff member. I've got to do that filing. So what happens is, I'd like you to eat the frog with me this morning, first thing. Unfortunately, it's a bit of maths, and I know we hate numbers. And I know that as entrepreneurs, we don't like this admin thing. But there's magic in those numbers, and I'm going to share that with you. If you can take out your handout, and on the first page, you'll see the handout says Cash Flow Planning That Works. Cash Flow Planning That Works by Thayn Niemand. If you open the handout, in the top corner, you're going to see a little table about gross profit calculation and cost of goods calculation. Relax, I'm not going to ask you to do the maths today. But what I would like you to do is go on to simplybiz.co.za. What Adrian has done for us is uploaded this little spreadsheet. So when you get home, you can actually do your own calculation on cost of goods and your gross profit and your net profit. So simplybiz.co.za, top left-hand corner, you'll find a table very similar to that. Use it, please, ladies and gentlemen. It'll help you. Why do I want you to know what your gross profit is? Because as I've mentioned earlier on, the more your gross profit, the easier it is to pay those fixed expenses that we have every month. Those expenses where we have to pay whether there's 1 rand's worth of sales or no sales. Whether there's 100,000 rands worth of sales or no sales. Rent, water and lights and those things. Now, it's not only about the gross profit though. And if you can measure your gross profit percentage on a regular basis, it's going to tell you some wonderful things about your cash flow. So the first thing that a gross profit percentage will tell you is about your pricing. So for example, if I'm coming to your business and I don't know your business and I compare your gross profit percentage from January to February to March to April, and I see the gross profit percentage is declining, it's going to tell me something. It's going to say, Thayn, look in 3 places. But if you don't know how to do a gross profit percentage, you're not going to know where to look. For those of you that just want to know, gross profit percentage, the formula is gross profit divided by sales times by 100. Gross profit divided by sales times 100 will give you gross profit percentage. So I'm going to look first of all at your cost of goods. I'm going to say, well, maybe your gross profit percentage is declining because your supplier has put up his price and you haven't put up your price. So that's the first thing I'm going to look at. The second thing I'm going to say to you is, are you declaring all the income to the receiver of revenue? Because a decline in gross profit percentage could be an indication that all the sales are declared. Okay, so that's the second thing the gross profit percentage will tell me. The third thing is what the accountants call shrinkage. It's called in the legal terminology theft, ladies and gentlemen. Okay. So declining gross profit percentage will tell me somebody's got money, their hands in your till. So that's why I think it's so important for you and I to understand the gross profit percentage. Measure it, measure it, measure it. Then I also like the gross profit percentage function for another reason, and this is the reason. Please, if you know how much sales you have to do this month in order to break even, can you please put up your hand? 8 of you, 9 of you. Please, what that break-even point is the point at which your business makes no profit or no loss. When you do your break-even calculation, you must include, as part of your expenses, a market-related salary for yourself. Not for your qualifications, but for what you're doing. So if you're a receptionist, but you qualified as a microbiologist, you use a receptionist salary. Okay. Now, break-even, you can work by using your gross profit percentage. So what you do is you take your fixed expenses. I think in my example it is how much? 40. So you take your fixed expenses and you divide by your gross profit percentage. So 40 divided by 50% will give me 80. So if I sell this month 79, I'm in a loss. If I sell 81, then I'm in a profit situation. You see why I like the gross profit percentage? Because it can give you those ideas as to where to fix the cause of your cash flow challenges.